All right, traders, welcome to today's recap. It is Thursday, December 6th, and this is Christian Farmers from the Tribeca Trade Group. So, what an interesting day that we had on our hands. And it's kind of been like this. I mean, these are not dull market days. This is very interesting every day and pretty volatile at that. And so I'll start a little bit with just with my market stance, which I've been, basically just saying, every time I do one of these videos, I've been just kind of talking about how I'm positioned, because I would rather tell you what I'm doing rather than I could say, hypothetically, oh, this is where you should have bought and this is where it should have gave you the signal for the day. I would rather just tell you what I'm thinking, and then we can go over the market action, and then what I would like to do going forward, if you've been watching my videos for a while, is just to kind of make it a little bit more structured and basically talk about 5 different index charts, and then about 5 or 6 different single stocks, and then 2 or 3 names that we've seen some good option activity in, that I think are the best, or some of the best trade signals for the day. So first off, yeah, I mean, I'll tell you, I've been trading much better in this environment. I've been adapting to it. I've traded for a long time. I know I've said this, if you've watched my videos before, you've heard me say this before, but I used to be an institutional trader for Merrill Lynch for a long time, and I've traded in a lot of different market environments. I traded through things like, through the financial crisis that lasted, a while. I've traded through the flash crash. I've traded through just a number of market events. The way that I look to kind of manage risk is you just have to be mindful. I mean, I do very much look at a lot of macro things, because it really kind of helps me change and modify my trading strategy. Also kind of tells me if there's a little bit more, what I think was, at times more risk than not. I like to look at global markets for opportunities, but also as just a sense of what is going on. And when the VIX was trading, the VIX is trading at a much higher level. It hit almost 26 today, and it's just trading at a much higher level. And you have to be mindful of your position size, of how much you're trading, and because with moves that we're seeing, and I keep saying this, but from the ranges that we were seeing, look at the range of candles that we were seeing back in the summertime, or even back up here versus now. I mean, these are monster moves. So the way that I can make money in this market is if I stay very nimble and have less positions on, because the issue is, if you have a lot of positions on in this market, what'll happen is you're constantly thinking about, oh my God, I'm down, this much money. If you were long coming into today, you're having to do a lot of trade management, and you can't stay focused on what the next move is going to be in the market and kind of think objectively, because all you're doing is basically trying to defend and manage some of your positions. So it really helps to kind of stay very nimble, so that you can kind of think about analyzing this market. What do you think the next move is going to be, rather than always kind of trading in the rearview mirror and looking at your P&L and your positions. Do I add here? What do I do? So that said, I think that's important. And again, that's what I'm doing. This video is obviously just for information purposes only. I'm not giving any recommendations at all, but I'm telling you what I'm doing. So let me go through some of the. So I'll come back to that at the end of the day, and maybe tell you where I made some nice money today, where I kind of had to get out of a little bit of my thinking. I've been very much. Well, I could talk about it now. I've been very much hiding in some value names and doing better in that, but those names got smoked today. So it was a very interesting change where growth names started to outperform value names today. The value names got smoked in defensive names, and we saw some reversal bars towards the end of, well, I guess towards the beginning of the week, where we started to see XLV, for example, the healthcare ETF, stalled right here at the previous high, and kind of reversed. And once you see that happen, the best thing to do is kind of just change your mind. Say, hey, this is different. I was all about the utilities in the beginning of the week. Actually, the XLU actually finished positive on the day. But this, to me, put in a reversal bar. And, from where it was. Geez, what a move. We saw all this call buying on Tuesday, but it reversed hard and putting in a shooting star candle. But we're going to see a lot of these crazy candles. So let me get to what. So the point of that is the other thing that helps me is just to stay anchored in what you thought was a good trade and not be stubborn. You cannot be stubborn in this market and say, hey, I'm going to outsmart this thing. This market is taking down a lot of investors. Uh, SAC, which is one of the better hedge funds out there, I think, Stephen Cohen, these guys announced, as well as a couple other hedge funds, Balyasny and a few other ones, said that they're not doing well. They're having a tough time in this environment. And these guys are, people follow option activity all day long. And you're following guys like SAC and funds that are struggling. So that's a whole nother topic. So I'm not going to get into that. But let me go through some of the most important charts of the day. Let me start with Europe. I'll start with the bad, right? Let's see. Do I have the Europe chart? No, I don't. Let's bring up the DAX. Because this, it was kind of interesting from where we turned around this morning. It was right around the European close. So if you saw my video, I do put out just a quick 5-minute video midday, and I talked about how I thought the day was setting up for a bounce. Why did I think that, and why did I say that in the midday? I put this out at 12 o'clock today, or before 12 o'clock, before we started to rebound, because I just thought everybody is super bearish, and there's so much bad news. You kind of have to think about this in terms of, which I don't have a great analogy for this, but when everybody's leaning to one side of the boat, which I think everybody, if you bring up Twitter, right, like Zero Hedge, right? Zero Hedge is always a market bear. They're a perma bear, but it seems like everybody else is getting super super bearish, and there's tons of bad news on the tape. So all it takes, I think, is just a little bit of good news, and which is what I said earlier. And I said we're going to rip to the upside. Whether it's debt, there's so many worries without actually anything really going that bad. Besides these are trade headlines, and I think people are making more of this than they really need to be, in my opinion. Everybody is so fixated on headlines like the sky is going to fall every time one of these headlines come out. So I think they're overreactions, and I think you can, as a trader, you can take advantage of when everybody is so fearful, which I think is kind of what happened this morning. Plus, even technical traders were looking and saying, "Oh my God, we're breaking support," right? In IWM and Europe, which I have up. So the DAX. So this is not out of the woods, right? This is a very ugly close, but at this point, with Europe trading as bad as it was today, and if we go back to my chart, so that that is not bullish, right? What I'm talking about is basically just how we were setting up for a short-term bounce, right? I gave that about a week and a half ago. I talked about how we were also set up for a short-term bounce when I saw a lot of money rushing into cash type ETF. So. You could see how this finished for the day, all basically more than 3%. So, but again, that closed, right around 11:15 is where that closes. So that's the one chart. And then I'll kind of dial in from IWM, which is the next worst chart that I would show you. But so we intraday, and this is again what I said on my 5-day intraday video. I was saying that, hey, the day is not over. So yeah, we're way below the October lows, but let's see what we could do this afternoon. So the most important thing always is the closing print, not the midday or where we are, in the morning. So, is this a great bullish looking chart? No, but at least we managed to hold the October lows. So we'll see if we can build on that. There's a hammer bar sitting right there. Next chart, I said 5, maybe I'm going a little bit more, but I think financials are important because if you look to see what's the biggest weight in IWM, it's the financials, small cap financials. So I should really look at KRE, but this is another problem area that we're seeing today. I'm going to talk about the call activity that we saw today in the financials, but it looks like KRE is actually, the regional banking ETF is actually holding, and you kind of have maybe not a hammer bar, but somewhat looking like a reversal bar developing right around that October low. So I think the financials are important to watch. Let me start migrating. So what was really interesting today were what was going on with the growth names, right? So I mentioned how defense got beat up, was kind of taken out in some of those hiding places. Healthcare has been, I think, an over-owned area, something that I've seen a lot in the something that I've seen a lot in the ETF fund flows. There's a lot of money going into healthcare ETFs. I think is a hiding place. So, overowned, those got sold off. But the Qs during the day, if you looked at some names, and I think some people were kind of realizing it wasn't just me. I'm not the only. I like to think I'm always ahead of the curve, but no, I mean there was people that were realizing that while everything else was going down, like healthcare names in the Dow, like Boeing, was still going lower. Some of the tech and growth names were not taking out the lows. Right, so here was the low. This was at 11:15. But if you look at names like Amazon, which I played today, I sold some put spreads, some weekly put spreads, to take advantage of the higher volatility. But if you look where the major indices were making lows around this 11:15, notice Amazon did not make a low of the day there. So to me, what that signals is relative strength. And if you look across a few other names, like look at I know this is a smaller cap name, but look at WWE. Look at what this was doing today. So there were some names that were doing this today. Some names that had earnings like Zscaler. This name. Where was the weakness in this thing today? Right. So there was some concentrated strength today, and there was some names that were even up as the overall indices were going to the lows right around 11 o'clock this morning. So it just felt like something that there was some underlying strength in the market. And I think that was a very good sign for the day. So let me finish up on my chart. So let's go back to WWE for a minute. Did I talk about all the and then there's a couple other ones. Again, there's a lot of moving parts. One of the things that I was also looking at is how well bid bonds have been for the last couple days. So I look at the TLT ETF. That's the long dated Treasury ETF, and this thing was really well bid. This was up over 1% today, but one of the things that I sent out on Twitter earlier was this thing was really overbought. So we got to pretty overbought levels around 11 o'clock this morning, right around when Europe closed. Look at the RSI, the relative strength index was way into overbought territory. Was an 80. And this thing started, so this was also some good confirmation that bonds were starting to sell off. This happened, I was day trading the Qs around a little bit today, and it is not easy holding this stuff because from here once Europe closed and we had this big rally, this big bounce, we kind of oscillated back and forth here a little bit, and it looked like here, we needed to hold this level here in the Qs, and I know because I was trading it, and we did that, right? We touched back here. Unfortunately, we did not have the momentum here to kind of get over. So we failed here, and I said I was holding a few January calls in the Qs. I said, hey, if we take back and if we give back this level, I'm out of those Qs. I managed just to stay in it, and from there on in, again, another fake looking candle. So again, this is not, it's tricky. Right? It's not easy. You kind of just have to say, draw a line in the sand and say, hey, I'm going to stick it out in this trade until it breaks, a support level, which for me was right around here, which was 164ish. But again, nice relative strength in the Qs. So they finished up as a whole, as an index, finished up 0.75%. So perhaps, right? And again, keeping a lot of people off kilter, right? Because a lot of people probably can't. There were some people who shorted, going into today, and probably if they did not, unwind their shorts in the first hour and a half of trading, they probably had a tough time today. So it just shows you how quick you have to be, both on the long side and on the short side. So I talked about the DAX. I talked about small caps, bonds. Oh, and then the last one is the VIX. on kind of the macro front. Notice what the VIX is doing here since October. Now, I know that the proper thing to do on the VIX is to really look at the closing prints. But if you kind of just look at the highs of where we've been getting to, I think we got a high of 28 intraday right in the beginning of October. And then when we had another bout of volatility, notice we did not take out those highs. We did go a little bit higher than this candle here. But since then, if you're looking at the closing prints, we're making lower highs. A little bit higher here. So again, if you kind of look at the intraday, this is even more dramatic. I think if you look at VXN, remember the VIX just measures the volatility for the S&P. It's not going to tell you what the Qs are doing. But if you want to look at the closes here, you could see that for the VXN, we are making lower highs. I think that's decent as well. So again, one day is not a trend. Well, I did add some risk today. I'll talk about where I added some risk. So I've talked about, that's basically everything I wanted to cover macro. I talked a little bit about WWE, but yeah, if you start to kind of break apart some of these single names, it still remains a stock picker's market, even though with this volatility. When you have volatility, when the VIX is over 20, things start to move together. But I like this WWE chart. This is a name that's been on my watch list for a while. It broke a downtrend and is now above value. It's got to get above the 50-day moving average. But again, I mean, look at this thing, up 7% today in WWE. Another name that I've been in and out of is BABA. I put this trade back on today. So why did I do that today? Because I took profits as it moved up and outside the 50. It's coming back and retesting the 50-day moving average. So this is a nice defined trade that I entered today, because I know that if it does break the 50, I'm out, and that's it. So it's a nice, easy way to say, hey, you got a breakout or retest. If it fails on the retest, I'm out. But I was able to take a target in this because I put this trade on pretty early in the morning. I mentioned Amazon was strong all day today, or was held up pretty well. I think all day today, did not take out those lows. It's back to the 200-day moving average. Was up, from low to high about 100 points. So pretty from right around the open today. And then if you look at some of the enterprise application software names, very strong. Workday up 1.8%. Cyber, which is this is a group that I noticed early that was having some strength around 11 o'clock this morning too. These were the cyber names, right? The data security names. Speaking of data, also a really strong looking chart. Almost taking out the 52-week highs as well. And then last one in this space is Salesforce.com. Almost broke the 200-day moving average today, intraday. This is the white line coming into your picture. Managed to hang in there. All right, so then option activity today. Again, a lot to cover in the video, but a lot of stuff going on. Lennar, really nice call buyer came in today. Keep in mind one thing that people forget about is with this move up in treasuries, right? The long curve, long-term rates are going down. That makes mortgages more affordable. So is there great demand right now in housing? No. But, I would say that this is a pretty decent looking counter trend trade in Lennar. So big February calls traded today. And I thought that was the best looking trade of the day. Also Citigroup. People came out and kind of looked to buy. I mean, this is I don't know if that's an island reversal in Citigroup today, but, it did gap down and then you got a hammer bar. Big 10,000 calls traded today in Citigroup, and then some smaller stuff. So interesting what they went after today. That was a spread. This one 1x2 call spread, it looks like 65, 67.5. But this was the block that I was referring to. February 65 calls that went up in Citigroup. Sticking with the financials, a couple other ones, and I took this trade because this has been a good trade for me on option activity, is FDC. It's also kind of putting in maybe a inverted head and shoulders. It does have support down here. It's also below the 200-day moving average, I know. But I saw calls in this last week. So sometimes I wait until I see that second call buyer, and I thought that was interesting. And then one more bank, CFG, also saw some calls, which is a name that's been also beaten up, but has support in here. I did not take that trade. So anyway, the video is 20 minutes long. So yeah, I mean, do I want to get crazy just because we had a reversal day, get crazy overweight equities? No. I think with the ranges that we're getting, like I said, I did add a couple trades today, but one in stock, one in options, and I want to continue to be very nimble in this market to take advantage of when things move to the downside versus and as well as when things move to the upside. All right, guys, thanks for watching the video. Have a great night. See you tomorrow.